If you own an LLC, there are unique tax deductions that you can absolutely take advantage of. And I want to make sure you do in this video. But before we jump in, I'm gonna need you to like, comment, and subscribe so you don't miss out on any of this wealth building information. The first deduction I want to talk about is the self-employed health insurance deduction. Now, if you are working your LLC as a full-time business owner and you are paying for your health insurance, you need to make sure that you are deducting your health insurance as an LLC business owner. If you are a single member LLC, you're going to deduct that health insurance as a self-employed individual. If you are a multi-member LLC, they should be including your health insurance payments and your guaranteed payments to partners, and you should still be able to deduct it as a self-employed individual. If you have elected to be an S corporation, you need to make sure, number one, you are taking wages and that your health insurance premiums are included in your wages, and then you're going to take your health insurance premiums as a deduction on your tax return as an itemized deduction. As an LLC owner, make sure you are taking your home office deduction. Even if you're renting space out of another location, you can have an administrative office in your home. Even if you are building your business as an LLC owner and you're going to a 9-to-5 job every single day, even if you are living with somebody else and you don't own the home, you are paying rent, you still can take your home office deduction. Here's the key. You gotta make sure that that space is exclusively used for your home office. That just means get a divider, divide up the little space that you're using for your home office, and that's your exclusive space. Take pictures. Pictures speak 1,000 words in the event of an audit. And once you have that documentation, you want to make sure that you choose one of 3 ways to get that home office deduction. Either you're going to take the simplified method, where you're just going to take an amount established by IRS that changes every year, or you're going to take a percentage of the square footage of your home office to the total square footage that you are occupying, and then apply that to all the expenses associated with your home office. The rent, the utilities, the internet. Although with the internet, do you need that for business and is your personal use minimal? That may be a deduction in itself. But you're going to also get your insurance payment, even if it's renter's insurance. Anything you're paying to make certain that you can occupy that space and be comfortable, you're going to take as a home office deduction and take a percentage of it. And then the third way is to lease a portion of your space to your business. What do I mean by that? That means that my business is going to pay me, Karla Dennis, a monthly fee every month for utilizing my home office. And let's say that I am going to decide that that fee is going to be $200 a month, $500 a month, or whatever that amount is, based on comparable lease rates. If I had to go outside of my home and I had to go lease space, 100 square feet, 200 square feet, whatever it is, that is how I am going to determine the lease rate of my home office. And yes, you are going to report that income on your personal tax return, but you're going to deduct the actual expenses associated with it, so it nets down to zero for you. So make sure you get your home office deduction in there as an LLC owner. In addition, you want to get startup cost deductions. Many of you have been working on getting these businesses together for a while. And some of you decided you were going to go after your business and started it just like that. But all of you have startup deductions, expenses that were incurred prior to you operating your business. How about, did you go consult with an attorney? Did you go do some market research? Did you go pay for some advertising and it never got off the ground? What was the cost that you incurred to get your business started prior to your business starting? Let me give you an example of what I mean by that. Let's say we're both going to open up a dollar store. And let's say that I am doing everything that I need to do to get my dollar store open, but I do not have an occupancy permit yet from the city. Nobody can come in and buy anything out of my dollar store. However, I'm starting to buy inventory. I'm starting to incur phone expenses. I'm starting to incur rent expenses. I'm starting to incur all of these various expenses, researching and looking up things. These are expenses incurred prior to my business opening. Those are what we call startup expenses. Now, you want to make sure that you understand that you can take startup expenses as $5,000 in the current year, and the remainder of your startup expenses up to a total of $50,000 can be amortized over the next 5 years. What does that mean for you? That means that if you incurred expenses last year and the year before that and during COVID, when your business didn't get off the ground and you never took those deductions, get all of those expenses together, aggregate them with the proper documentation, the fact that you paid for them by debit card or credit card, whatever it is, get all of those expenses together, tally them all up, and write them off over a 5-year period. It's the law that allows you to take those startup expenses, because every deduction counts when you are building your business and even when your business is an ongoing concern. Business travel expenses are another deduction that I want you to take. Remember, business travel has to be linked to your business. The development of your business are necessary to meet somebody, and it's preferred that it's a meeting in person, right? To get that good business travel deduction in there. You want to make sure you distinguish between business travel that's out of the country and business travel that is in the country, because the requirements are different. When you are traveling within the 50 United States, you can have business expenses every other day. You don't have to have business expenses every day. But when you are traveling out of the country, you got to be able to document those business expenses. And you want to make sure you are having some daily business adventures that you are documenting. And it really is a business reason why you had to go to that country to do business, that you had to physically be there, because IRS will scrutinize travel out of the country more than they will travel in the country. But I want to make sure you understand what type of documentation you need to have. You need to make sure you always have the receipt, you always have the method of payment, and that you have that copious log. What does copious mean? It means that it's a log that's in date order that you have jotted down, whether it's by computer or written, and that it makes sense. It's in an order that we can follow. In that log, you want to make certain you have the date, the place you traveled, why you traveled there, and really the business reason, right? Why you went there, and document the cost. Allow me to give you an example. Let's say that I am traveling to New York to do a TV show. I am going to document in my logs the date that I traveled. I'm going to put the airline that I traveled on. I'm going to put the reason why I went there. I went to do a TV show. I went to promote my business. When I go have a meal at Ruth Chris, that's right, Ruth Chris, Mastro's, because I love steak. When I go have a meal there, I'm going to document that I had a meal there. And when I get my receipt, I'm going to write on the back of the receipt and I'm going to snap a picture. Now, it's not required that you write on the back of the receipt, but I like to do that so that I can remember why I was at that particular location. That's the reason why I do that. And I will even keep my receipts, even though I know they're going to fade. I'm still going to keep them, but I'm going to snap a picture of them and I'm going to jot it down in my log. A lot of my travel time on my airplane, I grab my receipts and I jot them down in my log. I like written logs and I'm just that type of person. I like to write things down, but it's no requirement that it's written. The requirement is that it's a copious log. It could be on Excel. It could be in some type of travel diary. It just needs to be able to be presented to IRS when asked. And I don't like to present IRS with anything that cannot be printed out. You're not logging into any of my apps. We're not doing that. So just make sure that anything that you are utilizing can be printed for documentation. As business owners, continuing education is mandatory. I have been doing accounting and taxes for a very long time. I am still getting continuing education, not just for my license, but continuing education on how to operate my business. What's the latest and greatest that I need to be doing? For example, artificial intelligence is really starting to take over. So I'm making certain that I am taking classes on artificial intelligence. I'm taking classes on how to communicate, how to be a better leader. All of these classes and courses and master classes are tax deductible because they can sharpen my skills as a business owner, as a leader of my business. Whether it's an accounting class because I keep track of my accounting, whether it's an HR class because I have to be HR, human resources in my office, whether it's a marketing class, any class that you take that you can link to your business that can better your business and better you to operate your business can be a tax deduction. Again, the reason why, the receipt. So make sure you document it. And there is no requirement that it has to be a formal institution. There's no requirement that you have to go in person, that it has to be a university or a college. It just needs to be continuing education. And continuing education comes in a lot of different forms these days. It can be a subscription to a YouTube channel or something of that nature, as long as you are getting education from it. That is why I love for my LLC owners to follow me and understand that you need to be taking these business write-offs. You want to make sure you're taking your home office deduction. You want to make sure you're taking your startup expenses. You want to make sure you're taking your business travel expenses. You want to make sure you're taking your continuing education expenses. And what's most important is that you are taking your self-employed health insurance, because every business owner is going to need at some point a psychologist or a psychiatrist to keep our minds right, because we have to amp ourselves up. We have to be our own hype woman and hype man. So now that you know better, I want you to go do better. I want you to share this video with a friend, like, comment, and subscribe so that you don't miss out on any wealth building information. Now, go get after it.